Welcome to this week's Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. Of course, Cattle Call is brought to you by Wolf Auto, where they are small, town strong. I feel like this could be a very interesting week within the market, and maybe a bit of celebration, but a little bit of being humble at the same time as we look at what's happening in the trade, really history making that we are seeing in these numbers, and excited to be able to break everything down today with Brad Kooima. Brad, of course, is with Kooima and Varlick out of Sioux Center, Iowa. And didn't want to spend a lot of time on the intro, Brad, because this, as you and I talk, has become quite the interesting marketing day that's happening. I mean, you called it history making, and with all-time highs being set, you can't look back at this moment.
What great timing to have me on today, Susan. Nice work. I mean, thanks for having me on. Yeah, I tell you what, if you're involved with the cattle industry today, Susan, you're being a part of history. Period. The high of the day on fed cattle, $200. Talked about it and talked about it and talked about it. Could we, maybe, will it, all that other stuff. It's super fun, to see the market respond like it has here. And yeah, I don't want to jinx it. I don't want to, because things can change quickly. I don't want to pretend to have any, lock on knowing what's going on here. But by golly, I'm not going to lie. It's pretty hard to get the smile off my face when the market trades as great as this one has here. And again, probably led by cash. I suppose we can start there if you'd like, Susan.
Absolutely. Let's kind of find out what the motivation is behind it. And I think we talk about the cash. We got to bring up the sale barns again, because that is where the kind of rubber is meeting the road per se. And that's the driving factor behind everything you're seeing, is these guys and gals are headed to the sale barns.
The sale barn is the last, maybe, but certainly the place where true price discovery happens, where people bring what they have for sale, and you're going to find out who's sitting on the seats, what they're going to be worth today. And that's the way it's going to work. 180-degree opposite of way most of the cattle are merchandised in Texas and Kansas. So some of these sale barn sales on particularly some of these non-implant cattle have been just wild this week. Of course, it's, anybody on social media is looking at, seeing all these values, and good for them. And that, I think, part of that is reflection of supply, but it's part of that is also, I think, a tell, right, on how these packers have overplayed their hand. They wait too long. I mean, a packer that buys sale barn cattle needs them to die that day or the next day. I mean, that's why they're chasing in there. So, when they get that close to the knife, again, leverage. We talked about leverage and how fine a line it is between when you have it and when you don't. So it's a fun spot here, guys. Let's stay current. Let's keep that leverage, and let's see if we can't ride this trend out a little bit longer here yet, which is what I expect. I think we're doing it in the north, particularly. I think we're doing a great job of selling cattle on a timely basis. Yes, the weights are big because the weather's been perfect, but I think from an overall number standpoint, in the north at least, I think we've done a nice job of staying current. In fact, I think we're pulled ahead. I think a lot of February cattle are already dead.
So how deep are we when it comes to the steepness of this discount?
Well, the South finally got 202 today. Last week's trade up here, 205 to 6. We haven't traded this week. I think the North will be 1 to 2 higher at least. Asking prices around here, kind of around that 208 plus level. Probably won't happen till late week, which usually is a good sign, because that means that we've held out and made them come to us. Futures, to me, futures have lost their way, and it's disconcerting to me. I'll be at a NCBA convention here in a couple of weeks, and part of that, there'll be a meeting to talk about just how the CME has lost touch with the futures contract, has lost touch with the cash market, it seems to me. Just trading at a discount, it's maybe okay for the market because it helps keep us current, but it's a little odd that the speculator doesn't like our market better. But today feels to me like, I've had the customer question a lot of times today, Susan. They go, well, what's different today? Why today? And I don't have a good answer for that. Today makes sense to me. It's those days that are lower that don't make sense to me when you've got this kind of a discount structure in the market. So I it's again like that old analogy of trying to hold a beach ball underwater, and you can get and then you lose your grip, and then that's how the market is. But stay current, guys. The market's doing just what we want it to do here. I love the fact that the front end's leading us today. You can tell I have a hard time. I've run out of adjectives to describe how much fun this really is. Yeah.
Last week we had a great in-depth discussion about 2015, and obviously trying not to go back to that point. But when you talk about the fact that you as cattlemen are going to be working and having the discussion about that, disconnect that's happening with the CME, does it still stem back and start at that 2015 mark when things changed on the trade floor?
100%. I remember sitting at a meeting in Washington, D.C. with other industry leaders, I guess is what they call it, and talking about things, velocity logic, things I didn't even really totally, that were kind of over my head at that time. Basically talking about the speed of the market, what they allow, the pace of order entry. There was, we lost our currentness and our leverage in 2015, but we lost the pit. And there's no doubt in my own mind that was part of the whole deal. So yeah, either you adjust or you get run over, right? So all of us old guys are trying to adjust to this deal, and that's almost 10 years ago. But we're going to talk about that again, because in 16 they did do something to slow down the order entry. It's to allow the deck to catch up. It's when that market would flush. Then, if anybody remembers, it would be 300 points lower, just like woof, like that, and like what happened, and you wouldn't have time for the orders to refill, if you would. And I'm sure going to bring that up again, because everything's good now. But when's the last time we went limit up? I mean, you know what I mean? I mean, it's and we haven't today either. But there's plenty of limit downs that we all can, share our scars with. So that's part of the deal. But I think you bring up the 2015 is interesting, not to get too weirdly philosophical about it, but I do think that is part of what hopefully is going to sustain this good market longer, because none of us want to redo 2015 and 16. None of us. The cow-calf guy doesn't. That's not why he's not so old in heifers. The feeder doesn't, because he made all that money in 14, gave it all back in 15 and 16. We don't want to do that again, right? So I do think maybe we're going to be a little more astute about hopefully keeping our marketing on a timely basis, and that's also going to string out this expansion phase, which hasn't started yet. When we get a couple of weeks down the road, we'll spend a lot of time talking about that cattle inventory report at the end of the month, I would think. But at this point, we're going to fly blind and go with the idea that we haven't started expansion yet.
So, not to get too political in our discussion, but we have a new president in place. There has been a lot of tariff discussions and concerns, but at this point, not a lot affecting the cow-calf side of it.
No, this probably is over my pay grade, but we have to talk about it, right? And all the way through the campaign already, the talk about tough talk about tariffs. I thought that the market yesterday seemed to be relieved that there was no executive order specific to tariffs, and then last night, of course, we had the tariffs with Canada, Mexico. Nothing still specific to China, who is our number one trade partner for a lot of things, including pork and soybeans. But certainly it's something that we have to be aware of, I believe. Now, while I don't really think it usually pays to have the same expectation as the last time, in other words, the old riding last year's horse and this year's race story, but there are some that believe that this move with Canada, Mexico is actually supportive, at least in the short term, to domestic prices. And we do take in, well, the border's closed with Mexico now. A little bit of this is a moot point, right, on cattle. That's what we're talking about. This is cattle call. But the border between us and Canada is a whole nother story. Since mad cow disease, Canada has really almost lost all of their ability to slaughter their own cattle. There's like two plants, one a decent sized one, and then it's some smaller stuff. But we take in a lot of fat cattle out of Canada to get processed here, right? So I suppose that argument maybe makes a tiny bit of sense, that actually maybe that is supportive to us domestically. The stuff's above my pay grade, but I think stay tuned. Every day there's more I mean, there's going to be a lot of noise out of Washington here. And not all of it will be positive either, guys. I know this is about cattle, but the grains are not handling this great here today, and rightly so. Because we sell a ton of corn to Mexico, etc., which is also part of the reason my feeder cattle are probably so good today.
And I was going to ask, as we wrap this up, the fact that we're seeing corn tipping a little bit brings another advantage to those feeders.
Absolutely, as if they needed a story already, right? I mean, as high as cash feeders are, but I think that's certainly supportive today. I mean, I got March feeders almost $6 higher. This is not a little deal. We may never be able to talk about a day like this here for a long time again, Susan. It's pretty fun. And right now, the planets are all lined up. So let's be careful, enjoy what we got, and it's kind of fun.
Very well said. What's the best way for folks to get a hold of you guys?
You can check us out at kkvtrading.com or 712-722-0023. Thanks for having me on today. You couldn't have picked a better day.
I'm glad I did. That's another edition of Cattle Call. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And of course, Cattle Call is brought to you by Wolf Auto, small town strong. And that's the Cattle Call on the Rural Radio Network.